Welcome to Down the Shore. We focus on everything down the shore. And one of the biggest things, since Joanne and I are both realtors, is mortgages. And Joanne?
Hi, I'm Joanne Kent with Compass Real Estate and Morris Smith and our partners. And today we're lucky enough to have Mike Jamison from US Bank, one of our preferred lenders who we work with quite often. Mike's been in the mortgage business for 24 years, and we're just going to bounce around some things about if you're interested in buying a shore house, how to get started, because it's a big decision and a big process.
Okay. So, Mike.
So welcome, Mike.
Welcome, Mike.
Thanks
Thank
for
you
having
for
me.
doing
I
this.
appreciate
Yes,
it.
thank
really,
you so much.
really appreciate this. First podcast you've ever been on?
My first podcast. Yeah, I'm a little nervous.
Don't be nervous.
Don't be nervous. You cannot be as nervous as people are when they're thinking about buying a shore
Yes, that
house.
is true.
So let's start with that. What if somebody is thinking about buying a house at the shore? What would you recommend the first thing they do?
Well, being in the lending business and you're in the real estate business, we always say the first thing is to get pre-qualified or at least talk to a lender to give you an idea of payments, down payments. A second home market is a little different than the primary home market. So it's always good to get started with that. It doesn't have to be a, super intense time-consuming process. You can just get an overview at least to get started to see what's available. And then people can figure out pretty fast, oh, yeah, I think we can do it. And usually they can. There's more flexibility than they think. So I think that's always a good
that's really
step.
important, just because when I started looking, my husband said, "Oh, we can't do it," and then I called a mortgage guy, and he was like, "Oh, you can do it. You can do it big."
Yeah.
So it's more it takes the fear out of it, and then
Right.
you don't want to start looking at houses and not be able to do it and get your heart set on something. So I think the best thing to do is talk to somebody, a lender first.
And the worst thing is if they get their heart set on something they really can't afford, and yet there could be something that is affordable for them.
Right.
So you mentioned that there is a difference between getting your primary home or getting an investment second home. Can you break down what the difference is between the two?
Sure. On the primary home, you generally have a lot more flexibility with down payments. You can put 3% down, 3.5% down. There's an FHA loan, which is only for primary homes. So that's a pretty flexible product. There's something called down payment assistance programs for the primary homes, where sometimes there's a state grant that can give you a down payment. Those programs generally aren't available on the second home. The second home market, the lender wants to see, a little more skin in the game, so to speak, bigger down payment. Usually you like to see 20% down. There are some 10% down programs on the second home. They can be costly, but you can do that as well.
So, and that is a big part of it. So, if a person is looking at the second home, there's a difference between whether it's a second home or an investment.
Right.
Too.
True. Yeah, and in our market, it's a little unique, and we always fight with the underwriters and say, well, this is how it is. We're along the shore. We have a 10-week rental schedule. So, yeah, a lot of people, they use it as their second home. It's available most of the year. They use it in the summer, but they might want to rent it a couple times a week. I've been with some lenders that are very strict. If you're renting it for a week or two, they call it an investment property, which really hurts the rate, the down payments. You really want to finance it as a second home. We're pretty lenient. As long as it's not rented for more than 90 days, we're okay with calling it a second home. And if you don't need the income to qualify also. That's the other thing. Some people do need the income to qualify, so you have to...
The rental income.
The rental
Okay.
income to qualify. So you have to call it an investment property.
Is there an advantage to do an investment property over a second home, like from any perspective, taxes or anything like that?
I guess a little bit. If you're going to have your income on your Schedule E, you can write the interest of the mortgage off against your income. Sometimes the 1031 exchange, which is a little deeper product, but those exchanges, it's better to classify as an investment property in some circumstances.
Okay.
What most people want to do, and which you can do sometime, is get the second home pricing and programs and still use that 1031 exchange.
Let's talk about 1031 exchanges.
Yes.
Because especially you differentiated between the primary market and the really fun shore market. So a 1031 exchange, I will tell you we meet a lot of people in open houses, and Joanne and I will say, do you have an investment property? And they'll say no, and they're like, wait, yes, they
Right.
do.
Yeah, we do. We do
And
rent
they-
our house 4 weeks
Well,
a year.
So what?
What are the
1031?
criteria? Yeah.
Yeah, and again, I'm not a super
You're not
expert on
yeah,
it,
yeah.
but generally, if you have an investment property, you can, when you sell that property, it has to be a like in-kind type property. When you buy the other one, any of the proceeds that you have to roll into the new property, and you don't have any tax consequences, no capital gains, nothing like that. So it saves you on taxes. You do have to roll all the proceeds into the
Over.
new
Okay.
property, and you have to have that first property rented. You can't sell a primary home or a second home with no rental income and roll it into an investment property.
How much do you have to have rented the home that you're rolling over? Like, is it a minimum number or?
I'm not 100% sure about
Okay,
that.
I don't know either.
But I think as long as you're reporting some income on your Schedule E, it
Okay.
usually works.
So, just taking a step back, the distinction between pre-approval, pre-qualification, and then
Commitment.
fully approved. Because I've had some people that were fully approved before they even found their house. So,
Right.
can you kind of break down each one?
Sure. A pre-qualification is generally what everybody does in the beginning. Talk to someone like me, run their credit, get some pay stubs, W-2s, and a loan officer. I've been doing this 24 years.
Right.
If somebody's pretty experienced, you can tell, hey, they're going to be fine. You run it through a software, and you say, yeah, they're pre-qualified, and they give the letter. A pre-approval goes a little step further. We would collect more documentation, pay stub, W-2, bank statements, and actually send that to a underwriter to get a true credit decision. That's a pre-approval. That is a little more, has a little more teeth behind it, because an underwriter looked at it and said, hey, yeah, but there's no property at that time. Then to get to an approval, you need a property, and because you have to get the appraisal, you have to get the title insurance, you have to get everything in the background. Then to take it a step further, like you mentioned, a commitment, you'll get a conditional approval or a commitment, and that just says, hey, yeah, we're going to lend this person money. We do need another bank statement, there may be conditions on it. But what you really want to get to, and everybody, sometimes the commitments have some conditions that are pretty tough to reach for people. We all want to hear clear to close. That's the three
Usually
words we want
They
to
are
hear.
the best
yeah.
words.
Years.
Yes,
So,
clear to close.
behind the appraisal's fine. Clear to close is what we're getting at. So that's kind of the process that it goes
So you
through.
can't get a commitment until you have a specific property in mind.
Correct. Yeah. With what you would get before that is the pre-approval.
Pre-approval,
The
okay.
pre-approval was an underwriter looked at it.
So, would you recommend, because we are in such a competitive market,
competitive.
inventory at this present moment is low.
Right.
That can shift at any time. We've seen other parts of the country it's
They have a backlog.
more inventory is coming to market.
We
that
don't.
could happen to us.
Yes.
But right now it doesn't. So what would you recommend to
To be super competitive because it's a competitive market.
To be super competitive, the pre-approval is better. Sometimes you're trying to put the offer together quickly, or the house is going to be hot and you might only have time for the pre-qual. So I would always get that first and then kind of build on the pre-approval. The pre-approval does take a little longer at times because it has to go into queue. Now, right now, unfortunately, the market's not super busy, so
Okay.
underwriters have time. When we're at full capacity and there's a lot of refinancing, that pre-approval could take a little longer.
That's a good question. So what's the full, soup to nuts? I call you today, Mike, I think I want to buy a shore house. What's the quickest we can get to a closing?
That's a loaded question. You're gonna, well,
That's what we're asking the tough
yeah,
questions.
and so we.
Rule of thumb.
Yeah, I mean, 30 days is generally what we look for in this market. There's markets in North Jersey and in New York. They're 60 days.
Wow,
Is
okay.
normal. We're 30 days. We have closed them as quick as 14 or 15 days in this market. A lot of it does depend, and that's good to get a pre-approval up front, on the customer.
Yes.
If we ask them for a tax return,
Yes.
we ask them for a W-2, we ask them for something, if they give it back to us quickly,
So that's
it
really important.
helps,
So
yeah.
the buyer has to really be proactive, cooperative, and get you everything ASAP.
And that's good, like we talked about going in the beginning. What's the first step? Talk to a lender, because at least they know what to expect.
Right.
You know, with a primary home, you might need a pay stub and a W-2. Well, with a second home, you might need the full tax returns. You might need a little more information. So it all goes, hand in hand from the beginning till the end, and that makes it quicker when the person knows, hey, this is what we're going to look for, or they've already given us a lot of the information.
That's just such great advice
It
right
is.
now, because, as you say, the underwriters are a little maybe
Not
as
quite as
busy.
busy, right.
We're not as busy right now because we don't have a lot of inventory. So this is the perfect opportunity. If you are thinking about
Yes.
buying a Sure house, you really need to listen to this whole episode and call us,
Exactly.
and then call Mike.
So I have a question for you.
Okay.
We've done a lot of things together. So it's not that you're not a financial advisor, but I think the reason that you want to choose a lender in the local market is because our product is unique here. It's not like a traditional standalone home. There's different things. There's floods. There's houses on the bay that need different coverages. And then also, you have some creative solutions sometimes. Like maybe that a person who's buying a second home doesn't even think is an option. So can you touch on that a little bit?
Right, and that is that's a good question, and we always have that here with the flood insurance, the 2-unit condos, the things like that. But one good example is with down payment. Sometimes people think, oh, I don't have that money, and
Right.
then
I don't have
we'll talk to them a little.
$400,000,
Right,
yeah.
we'll talk to them a little and say, hey, do you have an equity line on your primary home? And they
Right.
do. Oh yeah, a lot of times they already have it in place. I said, well, you can use that money, and they just don't know. They don't do
Right.
it every day. Oh, I didn't know I could use that money. For qualifying, there's distributions from an IRA they can do to use if they need more income.
Mm-hmm.
So there are a lot of creative ideas that people who don't do it every day and aren't in the market.
Right. Well, you're not
they-
buying a shore house every day,
Right.
or a second home in general. You're not buying a second home, so
Right.
you need to have.
Ex-
You work all your life, right? You have equity or assets, or
Yeah.
your home's paid off, or whatever it is, and you don't realize that you can tap into those things.
Right. Yeah, and I think most of the people, as far as on the income side, we can qualify for a payment way higher than they want.
Yeah.
So I think these days, yeah, but
Like a first child.
exactly.
Like that.
The biggest, I think one of the biggest obstacle these days are the assets, and just getting people to understand what they have and what they have available to them
Right.
to use for the process.
So we're at the yacht club right now. There are a lot of people that they no longer have income, like traditional income.
Right.
Do we have any special
Advice for them.
Yep, absolutely. There's a couple programs. We have a private wealth program, which is pretty detailed, but that's a great program where if you have a lot of people have a lot of assets, no income, like you said, so you can't get approved. Well, we do have asset-based programs. Where
Okay.
you can use the assets. There's some formula we use to qualify. And the other thing I just mentioned, a lot of people who quote unquote don't have income, they have an IRA. You can take a monthly distribution from an IRA to qualify
Oh.
for
I
a
didn't know
mortgage.
that.
And people don't know that. They have
I didn't know that.
$1 million, and we can draw, as long as it continues for 36 months, you can use that income. So they could take a $8,000, $10,000 distribution
Every month.
to use
3
as
years.
income and qualify.
Oh, that's
Yep.
good to know. Did you know
That's
that?
real. I did not know that, but I think that's a huge myth buster that
Yes.
that you're saying, because a lot of people will even say, I'm only going to be working another year or two.
Right.
We
What happens
we
then?
want to
Right.
get approved while we're still working, and yet if we could, they may not find that house in 2 years.
Yes.
Yeah.
But if we could start planning, if they get to us and you earlier on, then we could have different options in place.
Right, and we do that more than you would know. As realtors, we
Sure.
don't discuss anything
People's
with
finances,
with
yeah.
with you, but we do that a lot, and that's a good point you made too. If people say, "Oh, if I don't find this home in a year, my income's going to change," at least we know, hey, we can do this. Here's a way we can shift to to keep the ball rolling and get
I
them
love
their-
that.
their
Learn stuff
second
every
home.
day.
I know.
It's great.
I know. This is amazing because we're thinking about the obstacles. I was at the Windrift last night and met this couple. She's pregnant with her second. I told them I'm a realtor, and they're like, "How do we get a
Right,
shore
how do we
house?
get there? Everybody says that.
How
do you do
we,
it?
So
Yeah.
we talked about like the back end of their careers. Now, what about people that are in the beginning of the career? Any advice for young people that
Maybe have
20
big,
years from now they don't want to say, "I wish I bought a shore house 20
Right.
years ago."
Right. I think the number one thing, and I give I have a 27-year-old son and a daughter who's 23. The main thing I'm trying to really pound into their head is don't have a lot of debt. That's what really kills you going forward. You have to really get hold of your debt. Don't live above your means. Huge car payments, credit
Right.
cards, boat loan, RVs, all that stuff. It's it's
good
great
advice
to have
in general.
Yeah, but if you that's what gets people as they get older, because you're qualifying with a primary home and a second home. So you do need more income, and if you don't have enough bad debt, if you don't have the bad debt, you'll be in good shape.
Nice.
I have a question for you. If you are renting your second home or your beach house, does that income from the rental, does that get included when you do your evaluation as to how much they can afford?
Yes, it can.
It can.
Yep, that's what I was saying. Sometimes you want to finance it as a second home
Right.
because you don't want to use that income to qualify. But if you do need it to qualify, or if you have a second home and you're doing a refinance, or you're getting buying another house, then that
Right.
income does help. And sometimes people need that to qualify, so that's a good
Okay.
tool.
Another
to use.
option.
Another option. The rate on an investment property will be a little higher.
Mm-hmm.
Maybe you have to put a little more down. The guidelines get a little tighter
Okay.
on
It's
the
good to
investment
know.
property.
That's important. Joanne and I are on an overflow house kick.
Yes.
Okay, I don't know what that is.
We're going to tell you.
So,
So
here-
let's use Mike for an example. So you have your beach house where you live,
Mm-hmm.
and your kids are 23 and 27. So now 3 years from now they're married, they have kids of their own, and you want them here at the shore,
Yep.
but you don't necessarily want them in your house.
Okay, all right, I can see that.
So
It's a new
you
thing.
either take equity from what you're in, or if you have other assets, and you buy either a small place here or a condo. So you can still go to the beach together, and you can still have dinner together, but then their kids and their dogs are in another location.
they can go nap and
Yes,
be loud and, do
you
whatever.
don't have to change your lifestyle while they're there. So
Right.
we have a ton of clients that have talked to us about, oh, we need like a 5 or 6 or 7 bedroom house now, but we're saying maybe you don't. Maybe you need to stay where you are because you love your house.
and they love their beach.
And they love their house and their beach and their
all
street
their
and
friends
their neighbors.
are on their beach.
Yep,
And
that's
then
a
we
big
can
thing.
show you something that's, more affordable, maybe not up to your standard. You know what I mean?
Right.
But it's still a great investment in other place. So that's where we're looking into those types of things.
I think that's a great idea.
Yeah.
And now, what did you call it again?
An
Overflow
overflow
house.
house.
An overflow house.
So
Okay.
you can rent it when your kids aren't down, and when your family's down, or if you have friends that you can always use it. So
Yeah. No, I think that's a great idea.
So sometimes when we're talking to people about overflow houses, first thing they
they're like,
talk
oh,
about is interest rates.
Yes.
They've got a low interest rate.
Yes.
Yep.
They've got a lot of equity in the house,
Mm-hmm.
but they still need an overflow. Any advice for people, and or maybe just people investing and getting additional shore
Right.
houses?
So yeah, would that automatically be an investment property?
For the most part, yeah.
Okay.
Yeah, for the most part.
Unless that shore house was paid for. No.
It's, you can spin it a couple ways. It depends on if it makes enough sense. Where they say, "Hey, we're never going to rent it. It's just literally for our family."
Okay.
And that could happen.
And if it's paid off, and depending on their situation, maybe you can
Okay.
you could do that. But we were mentioning about the how to finance the overflow house.
Yes.
Yeah, everybody loves their interest rate now. Everybody has a 3% rate or
Yes.
2%, and that is great. I just think historically rates are mid sixes today, low sixes. That's pretty
good.
good.
I think so,
historically
yeah.
that's pretty good. And I think over the last probably 12 months, people have finally started to get it. Like, hey,
accepting
this is,
it.
Yeah, this is the rates. These are the payments.
No, we're not going to see 3% again.
Yeah, I don't think so. I think we'd all love it, but I don't think that's
We would love
happening
it.
anytime
I,
soon.
you know what? We would love it, except that would also spike the
pricing.
prices.
Right.
Prices
Yes.
would go up, sure.
Yes.
Right.
Yeah.
Because a lot of people
And
will say to
demand
us,
would go.
if we're just waiting for the interest rates to go
Yeah.
down.
Well, it's a big difference from 3% to the 6%. When
course.
you look at those payments, it's like, man. So
Well,
people did have a lot more buying power. No
I
doubt
had
about
a
it.
I had a listing not too long ago, a year or two ago, and it had an assumable mortgage.
Oh boy,
That was crazy, like a 2.5%
Yeah,
assumable
awesome.
mortgage, which is really
It's like a
rare. and it's
jackpot.
that is very
it's
rare.
so rare down here. But I think you're right. It just kind of it does make a difference. We will see the slightest change in interest rate going down, and buyers are
Yeah.
out of the woodwork.
It's amazing. Yep. Yeah, it is.
So are
amazing.
rates a little bit lower these days, like in the last 30, 60
yeah, I
days?
think they went down a little bit. There's always the talk of hopefully in September they will lower, the Fed will lower the rate. Now that's the short term rate, but I think that's good for the psyche of people. They
Yep.
they think rates,
Agreed.
the rates are coming down. The mortgages don't always go right with that rate, but that should be a good thing.
Are people starting to use like creative things, interest only, 7-in-1 arms, HELOCs? What's
Yeah, I think on the jumbo side, the second home buyer, the 7-1 arm is really the most popular product these days, and that's good. I like it today because it is fixed for 7 years. If you hear people say a 7-1 arm, a 10-1 arm, a 5-1, that first number is how long it's fixed.
Okay.
So it's fixed for 7 years, and arms, a lot of people don't believe it, but arms do go down. So the prime rate today, I think, is 7.5. 7 years from now, if it's 4.5 or 3, that arm will adjust down.
Okay.
So I think it's a good safe product. 7 years is a long time, and if
It is.
rates drop, they can. A lot of people, what the plan is to refi into it, shorten the term, maybe do a 20-year mortgage or a 15-year mortgage.
So it's good to build a relationship with someone like you, and we know that a lot of our clients have uncle, aunt, somebody,
Right. Cousin,
cousin,
sister.
sister, and we try to just at least talk to you about the options, because everybody thinks their area is different and unique, but there is. Can
It is
you
different,
explain
yeah.
like
Yeah.
maybe some of the differences or some of, and sometimes you come in to rescue. They start
Yeah.
out somewhere else,
Right.
and you're rescuing them,
Yep,
right?
yep, that happens.
Because we're like,
Yes.
Mike.
that does happen a lot, and that's a good thing for us. I think the one example is flood insurance. A lot of people don't deal with flood insurance, and they may get a flood policy. Oh yeah, we're fine, and then finally an underwriter or somebody looks at it and says, "Well, wait, you can't do this. This isn't the right policy."
It's not enough.
We know, again, it has to go to a credit decision. It's not my decision, but I can look at a flood policy and say, okay, yeah, we're
This
good
looks
with this.
good. This
Yeah,
looks right.
or early on, I can say, well, wait, this might be a problem. We might have to increase coverage. We might have to change the policy. So that's just one example down here that is really trips outside lenders up, or it's a tough thing. You have to know what you're doing on the flood insurance.
So I think the bottom line is at least get to talk to you.
Talk to
too.
some- talk to a
talk to
lender.
your aunt, uncle.
There's no obligation
cousin,
to talk to a lender
right.
and
Right.
figure out
And-
what
and
your options are.
get some, but we know that it happens.
Yeah,
a
and
lot.
I think it's a very competitive area down here, and the second home market and pricing are different. 9 times out of 10, once we start talking about rates, they say, "Oh, your rate's really a lot lower than what my uncle was quoting me or somebody," and because we know the market, we know what
Right.
products we need, so we're always bothering our higher ups. Hey, we need better rates. We need this. We need that. For our particular market. So
We run into the same thing a lot of times. People about the short, they're like, "How much is the flood insurance?"
Right.
It's
not crazy.
It's not
No.
that crazy, or and so that's another fear that people have, that or the taxes.
Taxes, yes.
the
and
taxes are a home run down here.
They're so low. So
I love
they're-
telling people what the taxes are, especially if they're on the main line or in Cherry Hill area,
Yes.
and their taxes are
25,000
yeah,
plus.
25 grand a
Yeah.
year and or more, and you tell them it's 5,000 or they fall off their chairs.
So everybody should run out and buy a shore house today.
I think
Absolutely.
so.
I think
I
that's a
think
good idea. You should call you two, get
We'll
started
sell
with
them
you
and
two.
then you can write them up.
Yeah,
Yep,
exactly.
So can I ask you a non-real estate question
Sure.
or a non-money question?
Sure.
We've been asking this of all our people. So you live down the shore here in Sea Isle. You
Yep.
grew up in
Ocean
City.
City.
So you're like a shore guy your whole life. Who's the most famous person you've ever run into in the beach area?
The most
If anyone.
famous person. Off the top of my head, I don't know if there's too many famous people that I ran into that most people didn't. Can I go with Kelsey? Is that
Yeah,
is that
that's
too,
Everybody says
is
that.
that
So
too easy?
But we
do-
love
let's-
him. We love
no,
him.
we do. But let's see. Is there like even like a sportscaster or a
I did meet your
athlete?
friend Angelo.
Angelo.
Does he count?
Angelo.
He
Yeah.
counts.
Okay.
He's-
Yes, he
he's-
counts for
He-
sure.
He counts.
Yes. I don't know. Athletes.
Yeah, I think when I
Well,
was
your daughter's a Miss. What is she?
she was Miss Avalon.
Miss Avalon.
and
Do you meet
compete-
people through that?
Yeah, we've met people. She did do Miss New Jersey contest.
Oh,
I'm
there you
trying to
go.
figure out who was famous there that I met, but I don't think I ran across anybody. So
She is adorable.
Oh
thank
my
you.
gosh.
She
Yeah,
is just
she is.
absolutely
And sweet.
I
Very
met
proud
her.
of her, yep.
You
she
should
was
be.
not with you when I met her, and then I found out that she was your daughter, and I was just like, "What a special child!"
Thank you.
Just
Thank you.
really. And
We'll
he
give
spent,
all the credit to his wife for that
Yeah,
one.
exactly.
yeah, she is beautiful. Your
100%.
wife is beautiful too.
Thank you.
Absolutely.
Thank you.
What so
I'll tell them to listen to the whole podcast after listening
yes,
to
yes.
get
So
to
we
the end
love
of this.
we love name dropping businesses down the shore. That's what we're all about. So
Mm-hmm.
any special favorite restaurants anywhere at the shore?
I really think Sea Isle has some great restaurants. I like them all. I like La Finestra, the Poor House. My daughter works at the Poor House. We go there a lot.
Love the Poor
La
House.
Fontana,
Yes.
Anthony's. I like them all. So come to Sea Isle and enjoy the restaurants.
Right. And come meet Mike,
Yep.
your
Yes.
mortgage guy.
Our favorite mortgage.
Wait,
guy.
did we say where you are you allowed to say where you
U.S.
Sure.
I said
I'm
US
with
Bank.
U.S. Bank. Yep.
US Bank. Great. I tell everybody we get to the table
Yes.
with
Yep.
you. I
With
mean,
our
it's
local
just
lenders, yes.
it is a smoother transition, and it's hard to let
Well,
people
if you don't
understand
do this every day, you don't realize all the
Right.
nuances of
and
how hard it is to get to the
important it is.
table. Yes.
Right.
Right. Well, you guys always do a great job. Also,
Oh,
your
thanks.
customers are always on board, and you let them know, hey, when the lender or the title company asks for something, you gotta send it right
Yep.
away. So
But I think we
always a
should
pleasure.
start working on getting some people pre-approved on already, so we'll
Yes.
we'll have the be ahead of the competition and
absolutely,
Pull our guns
I
out.
think that's a great idea. Yeah.
Yes.
ready to do that. Mike, we
Thank you
cannot
so
thank
much.
you
Yeah.
enough. You are.
This was great.
This was very special, and I do believe people learned a lot from.
I did.
Yeah, I did too. I know.
I hope so. Well, thanks for having me. It's
Yeah.
great having me. You girls do a great job, and everybody
Thanks.
knows where to find you, right? For
Yeah.
real
Yes.
estate. Okay.
And Dusty, we have to talk about you are Dusty's go-to guy too. Our brokers, Dustin Larrick's, and
Yep.
he also uses Mike too. So.
Okay.
Well, we love stories, so we like to end every episode with a special love story of people that met down the shore. And I have Sarah and Dave today, and you're going to tell us your love story, right?
Awesome. Well, thank you for having us. This is cool. I'm very excited to share our story.
How did it happen?
It's not a long story, but it's interesting. So I own an event planning firm in Philadelphia, and after a wedding that I had in 2011, I drove down to the shore after the wedding, and I got to my house, and everybody was asleep. My parents were asleep, my grandparents were asleep, and I had just worked all day. I had a lot of adrenaline still going, so I was like, all right, well, I can't go to bed. It's 9:30, and so I went to the OD. We had a house or a condo on 40th Street, so walked to the Ocean Drive for a quick nightcap, so I thought, and I was there by myself and looked around and saw Dave and his friends, which were a big group of really fun-looking guys. And I was single in my 20s, obviously, so of course I had eyes on them the whole night. And eventually Dave found his way to me with a lemonade offer, because on Sundays at the shore, or maybe it was
Nothing
a
like
Saturday,
it.
but it was a Sunday, right?
Secret Service, yep.
Secret Service.
Yeah.
They just celebrated 50 years of being at the OD yesterday.
Wow.
Yeah.
So that's
Should have been there.
The funny part of the whole thing, though, is that I was by myself. And as I was talking to Dave and we were having our lemonades, he kept saying, like, who are you here with? And where are your friends? And I was so embarrassed. And he didn't, because I was alone. And I didn't want to admit that I was alone while he's with a bunch of guys. So after like the third, fourth, maybe fifth time that he asked me where my friends were and who I was here with, I found a random girl and I started whispering into her ear about her outfit and asked her where it was from, making it look like I had friends there. I have a lot of friends, but not that night. And that, I think I told you like months later how that, that I was by myself.
That was brave.
Yeah.
Yes.
And I didn't find that out until months later that she was there alone. So
Yeah, just by chance.
So what were you thinking when the
So yeah, I was down the shore for the summer with my friends. I'm a teacher. So I had the summer in Seattle, which was, I just graduated college, was still living with my parents. This is my summer of relaxation, having fun.
Summer of Dave?
Yeah, it was great. It was great. And early in the summer, I randomly met Sarah, and my friend Paul at the OD was whispering in my ear, "That's wife material. That's wife material," which it was funny at the time, but it seemed to be true. But yeah, it's we had such a fun time dancing. I actually walked her home to her parents' place, and
gentleman?
she said I wanted to go meet her parents, but I don't know.
Yeah, it was very late. I didn't know he was going to ask for my number. I knew I didn't want this to be like the last time I saw him, so I happened to have a business card in my, I guess, wallet or pocket or whatever I was wearing that night, because I was working that day. So I gave him my business card because he didn't ask for my number. So if it wasn't for that very swift move of me handing my business card over to him at 2 in the morning,
her?
I don't know that we'd be here.
Jeez.
Yeah, yeah. But it kind of continues with Seattle being the premise. I then with my girlfriends came down. So that was June 11th that I met him. And then July 4th weekend, my friend and I had a house rented on, although my family had a place, there was a bunch of us that wanted to be down here at once. So we rented on 51st Street, right? Mm-hmm. And his place was
boardwalk
on 55th. And so it was only a couple weeks later, we met up again and had a full week of Seattle experiences together. And I think that kind of jump-started our relationship because...
So besides the OD, where else would you go?
Oh, yeah.
Everywhere, anywhere around that area. So yeah, we watched the fireworks it was 4th of July weekend, so we watched the fireworks together on the beach.
Oh.
We had some nice meals together. We spent pretty much that whole week back and forth together, and we fell in love in that week. So it was pretty special.
That is awesome.
And then 5 years, fast forward, Dave proposed here in Seattle.
Where?
Right. So I had planned on doing it on the 51st Street house, which is right off the boardwalk. Mm-hmm. So we did a morning walk down in Seattle, and I had the ring stuffed in my pants uncomfortably. But so I had planned on going. We always used to go to the steps and kiss on the steps whenever we walked by it. So I was like, all right, she's going to ask me to go kiss on the steps, and I'll get down on my knee and I'll shock her. And of course, that morning, the whole family that's renting that house is sitting out on front of the porch. So we walked by once. I was like, all right, let's come back this way. The second time, they were still there. So we did it right in front, right on the boardwalk, right in front of the house. And but the family that was there was watching. They clapped for us, and then they said, "Hi, like congratulations," and they actually invited us up to take pictures on the porch afterwards. So we told them the story that that's where we fell in love there. So
wow, where did you get married? Back home?
Jamaica.
Got married in Jamaica.
Wow. So you couldn't stay away from the beach.
Oh, yeah.
No, we're beach people, clearly.
We're beach people.
And back again this week. We love this place.
Awesome.
Yeah.
Awesome. Are you renting or owning? What?
My parents have a house in Strathmere.
Strathmere.
So
Nice.
we're nice and close.
That's awesome.
Yeah.
That's awesome. So you're down here for vacation?
Yeah, we're down here with the week for the week with our whole family, all of Dave's family, our kids. We have 2 kids now, and so
How old are they?
3, and Jake's turning 5 in 2 weeks. So little ones.
Nice.
But we're bringing them down here and growing their love for the Jersey Shore, like ours.
Another
for this
generation.
They love it.
They
love it.
love it.
Yeah.
That is so awesome. Thank you so much for joining us. I
Yeah.
really, it's very, very special.
I have a feeling there's a lot of people who have met at the OD. I don't think we're original, but
I would love to know how many people have met at the OD. That's the craziest.
It's absurd. I'm sure it's absurd.
Yeah, it's a lot. Like all the places, and some of the places that aren't even here anymore, like Springfield or whatever. So
yeah. Well, thank you for having us.
thank you so much.